How do you balance fear versus greed in the middle of a market sell-off? Hi, my name is Gary Mishuras. I'm the managing partner and chief investment officer of Silverring Value Partners. So right now we're pretty much in the middle of a big sell-off. So if you haven't done this for a while, this is probably new to you. My case, I've invested for 2 decades, and I've had the unfortunate privilege of experiencing the sell-offs in the 02-03 cycle after September 11th and the 08-09 cycle. So while this is not a common occurrence, this has happened before. So how do you stay rational, and how do you execute your strategy when your emotions might be tearing you apart between fear and greed? You see one day the markets are up 10% or 8%, 9%, and you say, oh my gosh, I missed out. I should be buying more. And then the next day, maybe the markets are down 7, 8, 9, 10%. And you say, oh, everything is going to zero, right? That's at least what your mind is screaming at you. So how do you actually not succumb to that and invest rationally? And I think the answer is to be deliberate but gradual in your approach. By deliberate, what I mean is that you actually have to execute in your process. You can't get scared. You can't start changing your process because, well, this is unprecedented. Your process is exactly for times like this, so you can rely on it without having to reinvent the wheel. On the other hand, cheap stocks or cheap securities of any kind can go from cheap to cheaper to very cheap, then go down some more, and then go to lower. So that can and will happen. It has happened, right? So if you are new to this, if you're trying to be disciplined, you might kind of go all in, so to speak, at the first sign of something that's very cheap, and then watch it go down 50% from there, and not know what to do, and be kind of mentally, off tilt, and not be able to maintain your equilibrium. So the kind of the gradual part is, don't go all at once. Whatever cash reserves or liquidity reserves you have, just dollar cost average. So one day, stock, the process says you should buy the stock, buy a little bit. Next day, the process still says you should buy it at this price, buy some more. The next day, buy a little bit more. And so in that way, you're reacting proportional to the information. You're not kind of gyrating between manic emotions of, oh, everything is going to be great, and oh, everything's going to be terrible. You kind of, as things get a little bit cheaper and cheaper, you're buying a little bit more, and in the end, you're going to do just fine. Now, you might say, well, if coronavirus is going to shut down America, and businesses are going to stop selling everything, isn't can't any business go bankrupt? Yeah, it doesn't actually matter if you have net cash, because guess what? If you have no revenues, you're going to have massive negative free cash flow for most businesses because of fixed costs, and eventually you'll go bankrupt, right? Some sooner than others. But this is not going to happen. And by the way, if that does happen, your stock investment results will be the last two concerns. We'll be playing out scenes from The Walking Dead, if you guys are familiar with the show. But that's not going to happen, right? So what will happen, I don't know. But if you've chosen good companies, and you've analyzed them, and you've analyzed their businesses and their balance sheets, just stick with your analysis, update it as necessary, but don't succumb to the fear. So be gradual but deliberate, and continue to do what your process is telling you to do. I hope that's been helpful to you. If it has, please hit like and subscribe to my YouTube channel, and I'll see you guys soon.